Okay, it's interesting you say that because we have a company joining us now from the metal space. So Gurmeet, just stay on. We'll come back to you in a bit. It ties in well with the concerns that you spoke about. JSPL is on our radar. The company came out with an operational update yesterday. Steel production in Q3 has come in at 1.96 million tons and sales have come in at 1.82 million tons. The volumes this time have been impacted by a limited rake availability and unseasonal rains. We have the management with us. VR Sharma, the managing director of JSPL, joins in. Mr. Sharma, good morning. Can you tell us a little bit about how the demand situation is? This time around, of course, unseasonal rains hit volumes a bit, but globally we are seeing a bit of a lull right now. What is the situation on the ground, and what is the expectation in terms of volumes for the rest of the fiscal?
Yeah, good morning. The demand is pretty good thanks to Government of India and all the state governments. They have not declared the lockdown. So the MSMEs and the construction activities on pan-India basis are in full swing. The projects are going to be launched, and some of the projects which were launched last year, they are in operation now. They are under execution. So the steel demand is pretty good. So we faced a little slowdown during the time when Delhi NCR was banned for the construction, and especially the southern states in India, they were flooded with water. But we overcome this by the end of December. And now in January, we are finding a very good demand. And the iron ore prices worldwide and coking coal prices have started moving up. So this is a very positive sign in terms of stabilizing the prices. So I think the last quarter will be very good.
Mr. Sharma, hi, good morning. You know, we spoke with the managements of ArcelorMittal Nippon Steel, and they told us that steel prices were down about 7% in the last part of 2021, but some stability has returned. Could you tell us from JSPL's perspective, what are you seeing? And more importantly, how do you see the setup for steel prices from here out?
Yeah, they're right. 7% to 10% is the reduction in the prices in the last 2 months, in 8 weeks' time. There are basically two reasons. One, the coking coal prices have gone down. And at that time, from $420, they came down to $320 or $330 a ton, FOB, Australia. And secondly, the iron ore prices came down by 2,000 rupees. So cumulatively, the effect was about 12%. So the price reduction, what we passed on to our customers immediately, that was about 10 to 15%, not only 7%. And now in last 2 weeks, there is a recovery. Recovery means that the coking coal prices have shooted up from $320 to $380 now. Iron ore prices have gone up from $110 to $132 in the international market. So China is again back to buying mode. So they are buying a lot of semis. They want to cut down their CO2 emission. So that's why they are reducing the steel melting through the blast furnaces route. And they want to import more and more semis so that overall CO2 reduction or CO2 balance can be maintained by them. So that is a very positive sign for the countries like India, Iran, Ukraine, and Indonesia in this particular part of the world, and also for Russians. So I think in times to come, the prices will go up at least by 1,000 to 1,500 rupees a ton. And that time is not too far away. Maybe in next 1 week time, you will see that the prices are moving up.
Okay, within next week, prices will move up. Mr. Sharma, good morning. That's a headline that you've given us. Now, tell us in terms of your EBITDA and volumes, what does that mean, the recent demand-supply equation? Last time you told us that you'll maintain the guidance of EBITDA per ton at current level. Any update on that?
Yes, first of all, volume. In calendar year, we could do 8 million ton, and I'm sure in financial year also, we will cross 8 million ton, despite of various hindrances and hiccups for the transportation, etc., because we are not getting the rakes. The metal got accumulated in plant in various locations, but this is all against the orders. So this will go to ports as well as to the domestic customers. For the last 2-3 days, Railway has given us a good support. We are getting rake on demand, and this will definitely ease out the situation in times to come. Secondly, overall, the EBITDA level, if you see the percentage-wise, will be in position to maintain the EBITDA. And we were maintaining somewhere about 22 to 24% of EBITDA on an average throughout the year. So we'll be in a position to maintain in this current financial year also. We took a target of 15, 15, 50. That is 15,000 crores and more of EBITDA, 15,000 crores and below should be the debt, and more than 50,000 crores, that is 50,000 crore should be the sales turnover. So with the 9 months projections, what we have achieved, though the results are not declared. So we are on line. So we'll be in a position to hit somewhere about 56 to 57,000 crores of sales turnover as against of 50,000 crores what we targeted. Our overall debt level will be less than 10,000 crores. We planned for 15,000 crores. And of course, our EBITDA will be more than 15,000 crores. And this is what we planned earlier in this particular year, and we are online.
Okay, so 57,000 crores of turnover is what you're looking at. Wanted to understand, I know this is the question we ask you every single time, but any update in terms of a timeline for the Neelachal, asset? You said you're looking to bid very aggressively. At what point has it reached? What kind of ballpark number are you looking at in terms of bidding?
You see, now the bids are already closed, and Government of India will have to declare that who is the winner. So the highest bidder, I don't know who will be, A, B, C. We are also part of that. I think in next 1 week or 10 days time, the results will be declared.
Mr. Sharma, just another sort of quick word in from you. We got news that Adani and POSCO, the Adani Group and POSCO are coming together to put up a steel plant. Investment plans of about $5 billion. One assumes, rule of thumb, $1 billion for 1 million tons of steel, the greenfield capacity. Could you, any thoughts you might want to offer on this bit?
First of all, I welcome the move. The government of India has declared 300 million ton of steel consumption, which is likely to happen by 2030. So the existing players in India, they can do only 120 or maybe 140 million ton. Then we have the secondary players, they can do about 45 to 50 million ton. Many of the secondary players will face a hit in terms of reduction of CO2 and maybe phased out. So the country will be having a net shortage of steel in 2030, at least by 120 million ton. So this 120 million ton is to be bridged. So either it is to be bridged by the Indian players or to be bridged by foreign players in terms of FDI. So POSCO is coming to India with Adani is a good sign. So we welcome it, first of all. Secondly, as far as the investments is concerned, because POSCO is also very renowned and very reputable company, and they have their own reputation in terms of doing the projects at a very cost-effective manner. So I think they will be in a position to do it. Whatever the budget they have declared, that budget, I think it does not include land, building, railway, infrastructure, water, electricity, power generation. I think that will be over and above the value declared.
Okay, Mr. Sharma, we'll leave it there today. Thanks a lot for joining us. That's on JSPL. Gurmeet Chadha is still with us. Gurmeet, before we go forward, I just wanted your thoughts on the